Shweta Daptardar, Vice President and Lead Analyst with Elara, and she tracks the NBFC space. Let's connect with her to understand how things have progressed for the NBFC space for the quarter gone by. The numbers are not very impressive, Shweta, for the NBFC space, but is there the right way of looking at it? Because a lot of liquidity infusion actually has happened post-March, and the effect would be seen in this quarter rather than the quarter gone by.
Yes, so there are downside risk to the earnings estimates, especially after Q4 earnings. And largely, this is attributable to the higher credit cost, which in fact we had sort of called out that Q4 is going to be as sort of bad or elevated in terms of credit cost as Q3. And microfinance already remains under pressure. Following it was auto loan segment, which saw certain stress in LCVs, SCVs, and used CV segment where delinquencies continue to remain elevated.
Given that most of the companies are saying the stress in microfinance, which has been the key stress point for NBFC, that is getting over, what are the chances that this quarter the MFI book will surprise us, will delight us, and that will also help the stocks and NBFC stocks to go higher?
No, so we really certainly do not think that worries are behind for microfinance space. Rather, recovery is still 2 quarters away. And the latest announcements in the space have actually added further to the woes. So the latest Tamil Nadu ordinance which has come through, which is of course, wherein NBFCs and banks are not in particularly directly getting impacted, but it definitely distorts the moral credit discipline, given that the state has come up with an ordinance calling out for coercive measures used by microfinanciers as far as loan recovery processes are concerned. So it is so going by the precedence of Karnataka ordinance, it took at least 2-3 quarters for microfinanciers to fully recover from the Karnataka debacle. So likewise, and Tamil Nadu being one of the largest markets for microfinance space, so it accounts for almost 33% as far as NBFC MFI penetration in Tamil Nadu is concerned, and with the largest player, Credag, having almost 20% share. So definitely it will have a temporal transient impact in terms of delayed recoveries. Nothing as such we expect sort of impact on slippages per se. But the point is the woes continue and the pressures sustain. So clearly microfinance recovery is at least 2 quarters away. So even Q4 is going to be sort of tough as far as NBFC MFIs are concerned.
Uh, where would this entire angle of liquidity stroke low interest kick in for NBFCs? Because if liquidity is abundant and if interest rates are coming down, could that lead to more risk taking capacity? Could that lead to more credit offtake?
Yeah, certainly you're right. So two important measures that have happened this particular year, which has put up NBFCs in the spotlight. One is, as you rightly pointed out, the strengthening of systemic liquidity, and especially as we get closer to April and May, you will see more neutral to stable sort of liquidity scenario in the system, which definitely bodes well for banks to further lend to NBFCs and sort of gives a leg up to the credit offtake. Second important thing, which has turned out to be in favor of NBFCs, besides rate cut, of course, is the rollback of risk weightages for bank lending to NBFCs, which happened early this year, somewhere in February, and which comes to sort of implementation April 1st onwards. So, rate cut scenario, liquidity scenario, scaling back of risk weightages of bank lending to NBFCs, all these put AAA rated large cap or upper scale NBFCs definitely in a very favorable position as far as fundraising is concerned. So we believe as long as the rate cycle sustains, say probably 2 to 3 quarters, NBFCs will continue to remain in flavor. Having said that, we should definitely closely monitor the asset quality trends, and going by the results which have been already declared for Q4 till date, asset quality woes continue to sustain.
Okay. All right, Shweta, really appreciate your time and glad you could join us with your valuable inputs. Let's take a break with the news that so far so good. Markets are holding on. Off from the day's low, that list is higher. Off from the day's high for large cap stocks, that list is lower. And that's what you want to see. The markets are simply chugging along above that baseline, little bit of green, little bit of red. So this is pure consolidation which is at play. And this kind of consolidation, I would say, is a victory for the bulls rather than dullness or advantage bears.